Okay, what's going on?
So last night I ended up sending out like 30 or 40 emails. Had a
Nice.
whole bunch of responses this morning. One of them was interesting because one of the properties was in Chicago, I believe, Chicago or somewhere in Illinois. And the
Okay.
realtor got back to me, and I saw that there was a huge price cut that was nearly $70,000, just like within one day that the price got cut. So she
Mm-hmm.
got back to me, and because I sent the offer and whatever, and the property cash flows, but she found out when she ran title that the homeowner owes 60,000 in back taxes.
Ooh.
So that's what like that's why the price dropped as much as it did. So how would I go about? Like, do I just move on from that one? Because I was thinking I just move on from that one at that point.
Yeah, the problem when someone has back taxes or liens, something that they have to pay at closing or that needs to be paid at closing, that's essentially coming out of their down payment. And if he owes $60,000, what was the down payment?
25.
Yeah, then he would have to come out of the gate with $35,000
Gotcha.
in order to close. So yeah, you can't really do that deal.
Okay.
What's the total purchase price? Just out of curiosity.
It was 72,000. I mean, the
Oh
total,
yeah,
yeah, total purchase price was like 80,000, and then like I said, 60K. Originally listed for 150, so that's why it makes sense.
yeah. No, that's
And
not
and
that's
then
not gonna work.
obviously I backed out of the one with the 18% interest rate because that's like, bro, that's insane. Like
That's ridiculous. Yep.
I'm like, so so I can like understand the concept behind it. When I looked it up, it's an interest only loan. How do you even pay that? Like, what determines how much you pay monthly when it comes to an interest only loan?
So it'll just be the interest that's due based off of the loan amount. So in this
Got
case,
you.
I don't remember the exact numbers, but if it was $200,000 and then you put that into, let's say, a mortgage calculator and you put it at 18%, then it's going to give you a principal and interest payment. You just take the principal out and it's interest only.
Got you. Got you.
So
And
it's
then
never eating away at the actual loan amount.
got you.
When the balloon comes due, you still owe them $200,000. You haven't made a dent in that.
Right. And then about the one I sent you yesterday where you're like, go for it. Do you
Mm-hmm.
think let me see if I can find the address for you so that way I can give you the address and what I
Well, this
offer.
is recorded, so it'll be
Okay.
posted. If you don't have it under
Oh,
contract, I
okay.
won't put the address out loud. Just DM it to me.
Okay, I'll DM it to you real quick. But off the terms that I sent you yesterday in the DM, do you think my counter offer was fair? Like, because my only dilemma is this, right? Sometimes they don't argue or counter offer the down payment or the monthly payment. What they do is the base purchase price. When it
Mm-hmm.
that and then basically the term. I know I can't go lower than basically 7 years essentially, right? Like the 5 year, 2 year appraisal clause, like that. That's like worst case scenario. Like that's
Yeah,
that.
you can do anything on a balloon if you have an appraisal clause, meaning you can do a 2 year balloon, but it's got to
Right,
have at least a 5 year appraisal clause,
right,
totaling 7 years. So doing it that way, if you're going to put in an appraisal clause, then you can do any balloon, but I would generally make it just a little bit higher.
right.
So you can either have a 7 year balloon solid, or I can do a 2 year balloon, but it's going to have a 7 year appraisal clause, or
Gotcha.
I'm sorry, an 8 year appraisal clause, totaling 10 years max.
Right. Okay. And then I remember I read something in one of the subject to contracts that we had sent out about like acquiring at least 40% equity. And so one thing that I've been doing, I've been explaining to them, hey, look, like for the 5 year, 2 year appraisal clause, I'm like, hey, look, I'm gonna go ahead and offer you what I can't do like 3 years, but what I can do is a 5 year term with a 2 year appraisal clause, meaning that uh, I would love to have you paid off by, or the investor gets you paid off by end of year 5. But if they feel like they don't have enough equity by then, they can exercise that option no more than that extra 2 years, right? If they ask like
Absolutely.
if they ask how much equity you're trying to build into property before, like in order for you not to exercise that clause, what percentage is that? Like 40% within 5 years, 40% equity, or how much equity is the investor looking to get? I know it differs from investor to investor, but what's usually the number that I'm trying to tell them?
The number is always going to change because it's going to be dependent on how much the investor owes.
Right.
So As long as there's enough equity to refinance and pay off the seller, that's all they need.
Got you.
But you got to look at it in terms of, because here's the thing with the balloon. In terms of an investor, when we get them these deals, they're getting a sweet deal. They're getting usually 20% entry fee or less.
Right.
That's including everything, closing costs, assignment, cash to seller, even realtor commissions. They're getting in at the same that they would get in if they went to a traditional bank, but they're getting this usually at no interest or significantly lower interest than whatever the market's producing. So they want to keep that low interest because obviously that's a higher cash flow. Once they refinance, they're going to have a mortgage that's going to have market interest rates, and they may be good, but it's not going to be zero like what we're negotiating for them.
Right. Understood. And then one more question that I have is this. So I remember I told you like about a week ago or something like that, a realtor reached out. She's like, hey, this offer doesn't work for me, but I have a client of mine or a friend or associate or whatever whose listing expired twice. So she's really motivated and she would go for this. Me and you sat down, we ran the numbers, you gave me what I could offer her. It was a hybrid deal that consisted of subject to and seller finance. We'd go ahead and service the mortgage payments, keep them current, and then give her $135 a month, right? So she did ask a question yesterday that I just didn't know the answer to, which is if she were to pass away, right? How does she guarantee or have the peace of mind that that balloon payment, when it comes due, is going to go to her family members?
Sure.
Yeah.
So that's the contract or the promissory note that the balloon is attached to or that the property is attached to is a willable asset, no different than the house. So if the seller is at towards the end of what they think their life is going to be, and they're concerned about that, as long as they have a will and trust established, it's going to that contract, that promissory note for that balloon, even the monthly payments will go to whoever she designates it to go to as a beneficiary. Same thing when the balloon pops. When the balloon pops and that final payment is due, whoever she has listed as the beneficiary will get that check.
Got you. And then, if I'm not mistaken, for hybrid deals, there are no balloon terms, right, on the seller finance amount because we're taking over the mortgage, or not taking over, but servicing the mortgage.
You can, yeah, on a hybrid deal, you can absolutely put in a balloon because there's no balloon on the mortgage side of a hybrid because that's just a 30-year. Normally, it's just a 30-year fixed loan.
Okay.
But on the seller finance side, so let's say they have a mortgage of $100,000, they're selling the property for $200,000. We gave them, $10,000 down, so now we owe them 90 grand. Yeah, you can put a balloon on that 90 grand.
Got you. Okay, so if you don't mind, I'm gonna probably DM you here after we're done. I know you still have a bunch of people to talk to, but I have a deal that I feel like. So the lady, this is the same lady I'm talking to, who asked me that question. I feel like she is more than motivated because yesterday this is what happened. She called me and she was like, "Well, that." I am so sorry, Sean. You mind just staying on the if I hop out real quick? The realtor's calling me.
Yeah, do your thing, dude.
Yeah, I'll hop on in a minute. Just give me a second.
No worries. Recording, pick it back up. Okay, so had a good conversation with the realtor. Nicely done.
Yep.
Finish saying what you were saying.
What was I talking about? I'm sorry. I just
had dude, I don't remember. I underwrote it like
you're
off the phone. Something about DMing me the address.
Oh yeah. So I'm gonna DM you the address because this homeowner, her biggest fear was 135 with it because she's assuming it's gonna be 40 years, and I didn't correct her because that's what she's assuming. That's how long it's gonna take for her to get all her money. I think she did the math herself or whatever the case may be. So that's why I was asking about if we could put a balloon term on that $135 payment. So that way she has more peace of mind moving forward. Now, you already helped me out with the whole, hey, look, it's just like if you own the house and how a kid would normally inherit it or a family member, you just put in your will, right? So that's going to get facilitated through the contract and title company and your estate and all that. So that I have an answer for. Okay. Now the only thing I feel like is going to get me there is if she goes ahead and just, has a balloon term on there. So I'll send you the information. You let me know if it works or it doesn't. Because if it
Oh,
does,
no,
I
you
can.
don't have to send it to me.
Uh-huh.
The balloon is, what's the seller financed amount?
Let me pull that up for
I
you.
just need to know that.
Yeah.
And I'll tell you what, I really don't even need to know that. If it's less than $300,000, then your minimum is a 7-year balloon.
Okay. How that? It's
It's worth.
149,000. That's
Oh
seller
yeah, you
finance.
could tell her, hey, we'll get this all paid off in 7 years, and and if knock on wood, something happens to you, then at the end of that 7-year balloon, then your money will go to whoever your beneficiary is.
Okay, that sounds good. Yeah, that's all. That's all. That's all I needed at that point.
And you know what? How is this? Is she older? Older?
So she's in her late 50s. The reason I'm saying she's
Oh,
motivated, yeah, the reason I'm saying she's motivated, man, is because after I told her, because she kept wanting to go back and forth with me. She's like, and I'm like, I'm not going back and forth with you, because she's like, well, I told her like, look, to give you extra peace of mind and security, whatever you need written in the contract, we'll write it in. She's like, well, what will give me peace of mind and security is if you gave me 345,000 for it. I'm like, ma'am, you owe 221,000 on this property. I'm not going. It doesn't work for me. I offered you what my investors would like for them to cash flow. I can't just say, you know what, this is what works for her. Let me go ahead and make it work. At the end of the day, if you don't like my offer, find someone else to give it to you. And then I close the phone. She calls me back like an hour later. She's like, well, what if I leave everything in there? Like, I'll leave all the furniture, all the appliances. I'm like, like, I'm like, listen, I told her, look, this is what I'm going to do. I know what's scaring you is that 40-year term that is in your head because it's $135. Let me make some calls and see what I can do, and I'll give you a call back today. And so I'll
and is
call her.
$135 the most you can give her monthly per the cash on cash?
That's what I got from you. I personally
Okay,
run
yeah,
the
I remember
numbers.
this one. Yeah,
Yeah.
we did that one. It was $135.
It was
Yeah,
135. I think.
put a 5-year balloon with like a 2-year appraisal clause on it.
Okay.
Like, look,
Okay.
we can get you paid in best case scenario 5 years, worst case scenario 7 years.
Okay. That's it. That's all I needed to know. I
All
didn't
right.
know if we could.
Yeah. Oh, absolutely. On a hybrid, any seller finance portion, whether it's a seller finance by itself or a hybrid, you can do a balloon on the seller financing.
Got you. And then with the seller finance contract, I know how to fill that out. Watch the video. We're all good. With sub 2, do we only come to you exclusively for sub 2? The reason I'm asking is not that I want to do it myself. I would love to, obviously, but at the same time, I don't want to keep berating you and just hitting you up, and you got like 70 people blowing up your phone at any given moment. You know what I mean?
Absolutely. No, and I appreciate that. So I've got our lawyer working on, so we paid like $7,500
Whoa.
to have the contracts done by a real estate lawyer to make sure that they were legit. That's why anytime someone says the realtor said or the seller said they want their lawyer to look at it, should I be worried? No, our contract's solid. There are going to be things in it they may not like, but that entire contract's 100% legal and legit. So what I have them doing now is, because we signed an NDA, I have to get them to kind of make another version of it, like I did the seller financing contract, and then I can send you guys that and do a video on how to fill it out, which it's just the same things. You're putting in initialing spots and you just have more of those. That's all.
Okay, sounds good. Okay.
But in the meantime, yeah, any hybrid or subject to, just do the contract request in Discord and then put the terms of the deal in the additional terms section so that I know what it is. And then don't forget to put your email address.
Okay, sounds good. And then let me ask you this, because I think I want to take this home with this deal with this lady who's scared about the mortgage.
Mm-hmm.
I'm giving her $370,000 based on her asking price that she had listed. Do you think in order to motivate her more, I should treat it like a deal sniper deal and add a bit more on the top to the purchase price I'm going to offer her to sweeten the pot for her a little bit? Or what do you think?
I would say see if the balloon satisfies in all of her issues first.
Okay.
And then use that as a last resort, adding like $5,000-$10,000 to the purchase price.
Sounds good. Okay.
That's what I would do.
You, boss.
No worries. Good luck.
Yep. Thank you.
No worries. Talk to you later.